be going through some different charting techniques. It might seem a little bit basic tonight for some, but really, no matter how much experience you have, it's probably a good refresher. As a matter of fact, what I like to do when I have these types of webinars is I clear off my charts and actually do some recharting, because have you guys ever found that sometimes you'll have something on your chart and it might mean something to you? You might have actually had it there for a reason, but you don't know what that reason was. But then after you kind of do some recharting and clean it all up, you're like, what the heck was that there for? Or am I the only one that ever had that experience? Yeah, so sometimes it can actually, you know, I've actually said for a little while to myself that, maybe switching over to the think or swim charts wasn't the blessing I thought it was. Like with E-Trade and Scott Trade, I would literally spend hours every day just redoing my charts. With think or swim, it's all there for me. I just sit it and forget it. So sometimes it's a good idea to just, you might be looking at a chart, but as you're planning your trade, pull up a blank one and see if you still see it the same way. So we're going to talk about a few things tonight and talk about just ways to use different charting tools. Basically in an attempt or a hope that people are able to take something positive from it that'll help them understand a little bit more about assessing risk and reward of a trade. Because really that's what trade planning is all about. Doesn't matter what kind of lines you draw on your chart. It's really being able to assess the risk, reward, and even the probability of your trade. Speaking of that, what do you think can help us actually determine probabilities with our trading system? I know a lot of people that with different chat rooms I've moderated in and in this one too, that they've got one dummy chart they use for everything. And usually the other services I had moderated at, it was a 20 moving average, a 50 moving average, a 200 moving average, and Bollinger Band set at 22. And they would have a MACD, an RSI, and like a slow stochastics or something. And they try to fit that on every single chart they trade. But what do you think would really help us with the probability of our trading system, or determining that probability of our trades based on our trading system? Well, I will agree with that, Bill. In fact, I've got different charts that I actually kind of use for each stock that I trade. Have you guys ever noticed, like even the desktop sharing screen that I share, it's not like one chart that I keep switching the ticker symbol in, right? I do have some charts that I use channels on. I do have some charts that I use Fibonacci's on. I have charts that I use swing points on. I actually do have charts I use Bollinger Bands on. I have charts that actually the last two charts I had that I was using indicators to trade, I don't use those anymore, because over the past 6 to 8 months, those haven't even been as effective. But one thing I don't like to do is whatever type of chart that I'm using that helps me trade that stock, I don't like to just insert any stock ticker symbol on it, because they are different. And we're going to talk about a few of those differences before we go into looking at some other things. But for example, If you ever hear me refer to a naked chart, that's going to be this type of chart, the one you're seeing right here. Why would I call that a naked chart? Yeah, none of the indicators and stuff. It's just straight up the chart. Now, as you begin to add stuff to that chart, you'll actually immediately see that chart in a different way. And as you continue to add stuff to that chart, you're actually going to find that truthfully, your view of it becomes different. From the naked chart to that chart, did your view become a little bit different? Yeah, I can simply kind of run them side by side here. And there are things that may have looked one way to me before on a naked chart that because of whatever other thing I put on my chart starts to look a little bit different. And, that's something that you're going to see. And I'm going to just take a couple seconds. I would have already had one like already mocked up, ready to go. But again, I was having a difficult time getting even onto my computer. Just taking a second. Anyway, I'm going to move this chart over to the left-hand side. I'm going to take this chart and just kind of put it side by side. Oops, come on now. Oh, hold on. It's wanting to mess with me. So there's a lot of differences that you're going to see between limiting what you're looking at on your chart and probably overdoing what you're looking at on your chart. Now, what do you think is going to be the best way to determine what we should have on our chart and what we shouldn't? What do you think the best way to determine that's going to be? There you go, Bill. I like that answer. A little bit of observation, right? And we can get a lot of a truthful observation with just looking at the past, really. You know, when I'm trying to study something like, let's say, for how my daily charts are going to be made up, don't be afraid to go out 2, 3 years. I'm going to zoom this in just a little bit. You know, we can kind of look at some things on the daily chart. When the MACD crossed over, if I'd have bought, could I have made money by the time it told me to sell? Well, there's a yes. When it crossed over to the downside, could I made money by the time it told me to sell? Well, that answer is a yes. Up this way, it's a yes. This one time probably would have hurt because it crossed to the downside but consolidated. When it went back up, well, you know, there's 5 times on the MACD already that would have produced wins compared to one time that would have been a loss. One really simple thing just like that could help you determine if that's something effective to trade that chart with. Not even anything difficult at all. Now, have you ever seen a chart that you'll look at whatever your standard Bollinger Band setting is, and it seems like that chart doesn't like that one at all? But maybe you understand Bollinger Bands. Maybe you feel that it's a easy enough system to use to trade. You understand it. You want to use it. Is there any harm in adjusting your indicator values to fit each individual chart? Absolutely not. As a matter of fact, we're going to go through and we're going to talk about each different one of these real quick before we get into some actual charting. But I'm going to go ahead and remove all but one. Now, it might be fairly easy for you to determine just by looking at this that, man, those Bollinger Bands look like I could just buy calls when it touches the bottom, right? Isn't that kind of what it looks like? We go back over a couple years, and man, with this particular Bollinger Band setting, if I just bought calls when it touched the bottom, I could have actually made some decent money, huh? Look at that. Now, I don't know if you realize here, I'm going to zoom in a little bit. If we go back through this, and if you were going to just buy calls when it touched the bottom, you realize that means you would have bought calls right here. Or you would have bought calls right here. That one still could have been a winner, but you'd had to suck it up for a few days. You would have bought calls right here. You'd have got them right here as well. You'd have been buying them here. You wouldn't have gotten any of this couple dollar move. You would have bought them here. And then actually, That was about 30 cents off the bottom, so you probably wouldn't have bought them there. You probably wouldn't have bought them here. Probably wouldn't have even got them here. Is it okay to tweak your indicators? Right now I have this set to just a standard 20, which is kind of like the default. Is it hard to see the dark blue? Should I change the color on it for you guys, at least for this? Is it better like with that lighter blue? Okay. Now, like I said, if we used this setting and just made a quick observation, it'd be very easy for us to say, dang, if I just bought calls every time it touched the bottom. What we would actually end up finding is that if we bought calls every time it touched the bottom, what would we be targeting? What would our target be? If the bottom is our support, where's our resistance? Yeah. Now, you might be able to see a lot of times where it touched the bottom, but do you maybe also see a lot of times where the up moves fell short of the top? Well, you're right, Trini. The Bollinger Bands are like a channel in a sense. As a matter of fact, they're like two channels because usually you run a moving average in between them and you get like a bearish channel and a bullish channel. But no, the Bollinger Bands are just a measure of volatility that's based on price action and measures volume compared to a daily volume average, which is also set by the, like if I have 20 set in, it's also going to be set on a 20-day average of volume. But the point I'm trying to make with just quickly throwing something up on your chart, what you might actually find a little bit of is even though it might have looked like it gave you a lot of buys, I think you could probably agree that it would have had you falling short on your sells. I mean, let's look at this. Up moves here, even over here. Here fell short of it. An up move here before a down move fell short. This one did hit it. That actually fell short of the top. That fell short of the top. That fell short of the top. That fell short of the top. And then oh, well, okay, I'm sorry. You are right in the sense of just a mathematical term of standard deviation. I'm thinking standard deviation and options calculating. That's kind of why I answered that. But you are right. They run essentially parallel in a sense to a moving average based on a standard deviation calculation formula, which also weighs in on a few other factors, which is how it measures volatility. But again, tweaking your indicators just a little bit, regardless of what that indicator actually is, because let's face it, does it matter what the indicator is actually, what all the bull crap is that goes into telling you something, or does it just matter if it produces trades? There we go. One thing you might find at times is that on some stocks, do you see how that changed all of a sudden? Do you see how my line's like pinched in a little tighter? Now, if you count it over the 2-year period, those times that fell short of hitting the top line, we had one over here. Well, actually, that hit right at that top line. Over here, we had missed on that one, and over here with the 20 setting, but here we hit it. And do you see how actually this chart seems to trade fairly tightly within that particular Bollinger Band setting? Does anybody see that, or is that just me? So there can be effective indicators. There can be effective indicators that you use to trade a stock. Did anybody see the settings I used for those Bollinger Bands here on Apple? It was a 14. No, it wasn't 1420. It was entered in 14, depending on your service, it'd be like that, 14.2. The moving average was set to 14. No, that's a daily chart. I just have it. It's a 2-year daily. We're just looking at a longer period of time. But, I could go to other charts. I shouldn't have gone to one that I knew it actually did the exact same way on. Trying to think of a chart that I know that I would never use Bollinger Bands on. I don't think Amazon is one. Wow, this isn't a good example right now because everyone I've typed in actually looks like it fits this setting pretty good, doesn't it? Let's see. Good Lord. So that's probably because the only moving average I use for most of my charts is a 14. That's screwing me up. Now I got to think of some charts that don't trade with that. Okay, either the 14 setting of the Bollinger Bands is like the best ever. Oh, there we go. We got lots of tops and bottoms that miss on this one. Let me erase my lines. Let me check one thing in my notes real quick on Baidu for Bollinger Bands. Ah, yes. Do you see how that change might have skewed your view of it a little bit? Not just that I added the center line to it. I actually had in my notes for Baidu 21 setting Bollinger Bands with center line. And on my notes with that, see, there were a lot of times, especially like during this up move back here, and even a lot of these little choppy moves here, where it wasn't coming close to a top or bottom of that 14 setting of Bollinger Band. Now, if I'm going to use the center line in my trading, what do you think is an important thing for me to add to my plan for trading if I'm going to use this particular indicator on this particular stock? Think about it. What is that center line of the Bollinger Band? Anybody know what the center line of a Bollinger Band is? It's a moving average. So if I'm going to have a moving average there, what would I add to my trade plan for using the Bollinger Bands if I'm going to use the moving average? How do you trade a moving average? You trade a moving average with a MACD? There you go, Moss. Thank you. The direction of the moving average. So let's kind of look at that. And I want you to think of something that you'll commonly hear me say on any chart, no matter what type of tool, drawing, anything I'm using. Lines on my chart basically equivalent to what? There wouldn't be a line on my chart that I wasn't willing to do what with? That I wasn't willing to trade. I'm not going to waste real estate on my chart that could confuse me if I'm not willing to make a trade on it. Which, in essence, means that anything I have on my chart is basically support, resistance, or moving average, right? And that's consistent with, really, it wouldn't matter if I had Fibonacci's on my chart. It wouldn't matter if I had channels on my chart, would it? Because that statement would be relevant to all of that. That if I have it on my chart, it is either support, resistance, or a moving average. And that's a very, very consistent mindset that I do carry on all of my charts. So that being said, would the center line matter to me at all? As far as support or resistance? As far as support or resistance is concerned, would the center line matter to me at all? Well, it does, as what it actually is. It's a moving average, right? It's not support, it's not resistance, it's a moving average. And what's a moving average going to tell me? If the moving average is pointing up, what type of trade am I looking for? Okay, and if the moving average is pointing down, what type of trade am I looking for? There we go. I'd be looking for calls if it was pointing up and puts if it was pointing down. So the bottom line of the Bollinger Band would be what? Support or resistance? And the top line would be what? The bottom line support, the top line is my resistance. Now let's put that into other terms. For calls, the bottom line is where I'm looking to buy calls. The top line is where I want to sell them, right? And for puts, the top line is where I'd like to buy them, and the bottom line is where I'd like to sell them, right? And the line in the middle only tells me what? There you go. And not to really confuse you, but the only time I would buy off of a moving average, and it wouldn't even be based on a fixed price, like, oh my gosh, if it drops 1 penny below this, I'll stop out, would be in a case like right over here. We're going to start just going through this chart and giving an example of what I said so people aren't confused. And what I'm really getting at here would be really, really simple. From this point and all through here, my moving average is going up, right? Everybody see that? Well, let's face it. Chances are you won't be watching a stock when it makes this move right here. How do I know that? Because most chart requests I get are stocks that have already broke out. They've already made that move, and somebody's wanting to chase the tail end of it rather than studying and waiting for it. But really, if we were trading, we could buy here. And even, I'm not going to change the direction of my arrows. You're just going to have to tolerate the top ones also being up arrows. But, and make a sell here, even if we did sell at the line, or when it came back and crossed the line here. Now, in this particular case, that would kind of suck because it kind of kept going up and didn't give me anything to go on. But in the case where I'm coming off of a profiting trade, here didn't hit my line and started making an up move anyway, this is the case where I probably would have bought here or here and not really worried if it declined for a couple days and been able to sell here. Now, if I sold there, that is when I'll buy off a moving average. I'd buy here, and look, right there it hit the line. I buy here, and hey, on that day it hit the line. Now, at this point in time, my moving average is still not going down. The flow of the chart is still up, which means, and I'm not talking about the red day. Moss likes to buy on the red day. I only do sometimes. But see here with a sell here, and then because I am coming off of my target with a profiting trade, being able to buy here, in which I could either sell here or here. And to be honest, I probably would have sold at the first one. Now, if I got that one, that meant I could buy this one. And here it fell a little short. So if I'm already still in this one, am I buying it again here? If I'm already in it from right here, am I buying it again a week later when it's right back at the same price I bought it? Because it never hit my target. No. But would I have gotten an exit at my target? Right there, right? Now, would I have been buying here? Why would I have not been buying here? Look at all the candles that I marked as buy candles. What were they? What did they do? I didn't try to buy at the low. What was the actual action of the candle that made me buy? Because I'm not even trying to confuse you and say, oh yeah, you can successfully plan on buying the low and selling the high. No. It was a positive move off of that, right? Here it came down into that moving average, and the only reason I would take it is because technically I still could have been in it, but I traded it. I just sold it. Oh, you're exactly right, Moss. But it'll pretty much never get you the lowest buy, will it? You know what he said, buying on confirmation will save you a lot of headaches. And he's exactly right. But the reason I wouldn't have bought here, even though, man, it came down into the moving average, is because it didn't make a positive move up from it. Now, do I want to look at puts right here? I like that, Moss. I'm going to steal that one. The stock market doesn't reverse just because you hope too hard. But let's think about this. When this drops into this bottom side, am I buying puts just because it's there at that bottom side? You're right. Well, it is still kind of moving up overall. It hasn't curled down for sure. It might have been a little flat right there, but it's definitely not pointing down, right? And if a moving average is flat, that could be an indication that you're going to do what? Consolidate. And if you're trading options, are you going to make any money really on consolidate? There you go, Moss. You're going to hold on to cash because you're not going to make money in options on consolidation. Now, it does happen sometimes where you gap down a little bit. And to be quite honest with you, I wouldn't have even tried to or looked at this as a short possibility. I know that's hard to believe. Coach Mike wouldn't have looked at it as a short possibility. Nor would I have when it jumped up here. But would I have been looking at calls here? And don't look at the fact that, well, it went up because you don't know it's going to go up when it's happening in real time. Would I wanted to look at calls here? Well, then with that, you'd have probably said we wanted to buy calls right here because it hit my bottom line and went up. I got 3 lines on my chart. One is support, one is resistance, and one is telling me which direction to trade. Which one's telling me which direction to trade? The one in the middle, the moving average. Now, in this case, the way I would trade Bollinger Bands if I'm using the center line is I would have bought at the end of that day. And now also too, I don't want you to think that I'm marking these high points because I'm trying to convince you you could sell at that high point. Do you know where it would actually be that I would sell? we look at those tops, do you think I'm actually going to try to convince myself that I could get the exact top of that wick up there? Yeah. See where that, see where the green candle crossed that blue line right there? Yeah. I'm doing one of two things right there. I'm either selling it or putting a trail stop on it. Which, once I put a trail stop on it, that's kind of like selling it, right? Because I've entered the sell order. Now I want you to look at something. As it turned around and came here and rode down this band, yeah, I'm probably going to miss that using the Bollinger Bands. But can't I buy puts this day? And would I not get a sell this day? Do you see that? Now the sucky thing is I also would have bought puts this day. And if I'm targeting that bottom line, I didn't get to sell them until here, which was almost a full month later. And even though that's like a $10 difference, I probably didn't make that much money. Why wouldn't I have made that much money on that trade? Yep. The time decay would have got me pretty good. Now, by this time, you see that wick came down off my line. What's my moving average actually now doing? Look what it started doing there. So then that green candle there, wouldn't that be a positive move off the bottom line? Isn't that what that would be? So would I try to sell that here? There you go. No, because even though it went down for 4 or 5 days, I would have sold it right there. Did I try to convince you that I would have sold this exact top here? No. Why? Because if I was trading with the Bollinger Bands, remember, trading is different than investing. When you invest, you buy something and you hold it for a long time. Trading's not like that, is it? I invest in many things. I buy many things and I hold it for a long time. But I make a heck of a lot more trades than I do investments. Now, based on everything we've gone through so far, would I have bought right here? Would I have bought right here? Why not? On all these other times when it was moving up, I said I'd buy off of the moving average only if I had the profiting trade coming off or coming back into the moving average. The reason I say that is because if I've already had a profiting trade, I'm kind of going to be building up to trading on free money, huh? Now, would I have sold this here? I want you to look at it. Would I have sold this up here? On this day, right where that arrow is, where that wick went through went up above that upper band. I actually would have sold it like 3 days before, right there, this day. That's the day I'd have sold it. So again, trading, you can't have the worries of what if it could go up higher? You need to have the worries of, am I using a trading system I can trust? Now here you sat and watched this like, crap, that thing did go up higher. And I never really got a touch off my Bollinger Band until right there. Would I have on that green day? And still been consistent with everything we've walked through so far? Yes, no, maybe? Yeah, you're darn right I would have. And then the next day when it fell down, do I need to stop out? It gapped down the next day. Look at that. It closed clear up here at 184.94 and it gapped down the next day at 180.01. No, I don't need to stop out. Why do I not need to stop out? Exactly. My moving average still says be in calls, right? And there's going to be a time where it's wrong, but I'm looking right now to see how many times it's right compared to when it's wrong. And it's okay if I buy something and the price goes down on it a little bit. Would I have got my sell? Yeah. On this day right there, right? I would not have got it on this day. Why would I have not got it on this day? And you see, sadly, I see too many people like in the chat room during the day that they're too concerned with the fact that it's a red candle today or a red candle this day or that they bought on this day and it gapped down the next day. How many people have ever done that? They bought this day, it gapped down the next day. They panicked on the gap down, especially when it fell further from the open, and they stopped out, only to watch the chart do exactly what this one did. Oh, I can't. I probably couldn't even guess accurate, even within plus or minus 100, how many times I have. What makes you do that? What makes you actually stop out when you bought it this day and it gaps down the next day? Because I only have one answer for that question. I'll agree in the sense of not trusting your trading system. Because let's face it, if you were using this as a trading system and you bought and sold where each one of these arrows was, by this point, are you going to be concerned with a loss? I don't think you would. Has there even been a loss yet? Now look at this son of a gun. I sold it right here, and look what it did. Is this where I throw out my trading system? Now, I do have two choices of how I could trade that. Well, and you're right, Leonard. It was earnings, which means you'd have been probably better off to sell it here and get the inflated premium before the earnings, right? But I could actually trade common shares the same way. And in that case, there is one way that if you're willing to take a little more risk, you could still trade this accurately within the system. You see how every time this thing popped above the Bollinger Band, the upper band, what did it do the very next day? Or on the day that it hit the upper band? Literally, look at here, boom, arrow. What's the next day? Red candle. Look at this, green candle that went below it or above it. What's the next candle? Red candle. Right here, you hit it, but then it was a red candle that fell. You had a red candle that gapped up through it, boom, you fell. You put a wick up through it here, boom, you fell. Here you got a green candle, you hit it, boom, you fell. Green candle that hit it, and you fell. A green candle here that hit it, and then you fell. Right here, did something change? Every time you hit that line, you fell. Did something change? Even before the earnings, when it fell, it never fell back inside the Bollinger Band, did it? Now, I'm not saying, and we do see, yes, it had earnings that caused that gap up. But actually, if you look at it, and if you were trading the commons in a situation that wasn't earnings or even the options, a line on my chart below the price of the stock is known as two words. They both start with S. Could be one of two words, but they both start with S. A line on my chart below the price of the stock. Support or stop, right? You actually did see a difference, a change here. When it went above and didn't fall back within the next day, that upper band became what? It became my support. So if for some reason I did decide to take that and was using my Bollinger Bands, would I stop out right here? And the reason being, it just fell below support now, right? Now, that was earnings, and you guys know me. If I'm trading earnings, it's going to be on one that doesn't have inflated premiums. And Baidu definitely goes through earnings with inflated premiums. So let's watch something. Let's watch. See the direction of my moving average? Now here, I'll admit, I'd have missed that one. No doubt in my mind, I'd have missed that one. And I'd have missed that too. If I was using this type of trading system, I would miss that. Why would I miss that? Why wouldn't I have bought calls here? Why would I have not bought calls here? Come on, Coach Mike, it moved 20 bucks. Why aren't we buying calls? First off, you don't know it's going to move 20 bucks until it actually does it, because the day it came off of there, all we could see is what? a green candle with a moving average that was doing what? Sideways. I had to assume consolidation, right? I had to make the assumption of consolidation. What's the definition of consolidation? Multiple tops, multiple bottoms within the same price range. So technically, even that $20 move up could have still been consolidation, right? And that's one of those ones that just gets you sometimes. Because that's actually exactly what it did right here. It consolidated. It consolidated. Which way is my moving average going? Turned down right here, didn't it? So that could have been a pretty consistent trade entry. Don't you think I would have sold it this day? If I'm trading the Bollinger Bands? Get here, it hit that Bollinger Band here. Heck, even that would have still been a $10 move. Now, let me go back to this candle. Am I buying calls here? What do you think? Am I going to buy calls on this big green day? Excuse me. Yeah, it's still going down, huh? Would I be interested in puts on this day? No, you're darn skippy. Would I wish I didn't buy puts on this day? Now, I want you to watch something for a second, though. Now, this one, it would have hosed me, wouldn't have? Because one thing I would say, honestly, and I wasn't cheating, I was actually looking to see what the chart would do. I would have actually held those puts. Do you know what would have made me okay with holding those puts? Because there's expanded volatility. And that's what happens right at first. See, just like down here, they pull apart. The volatility has gotten greater, so the range between the lines gets greater. Well, yeah, as a matter of fact, Leonard, if we go back through to that point, we started right here on 9/8 or 9/6 of 2013. And here we are at 10/20/2014. How long is that in elapsed time? September 6, 2013 to October 20th. I mean, it's almost 14 months. Would you care about that one loss after 13 months of never losing a trade? I mean, you do realize that, right? Everyone we walk through, being very consistent with the system, this one was the first loss, wasn't it? At least for anybody that's been following along. Now, if we go through here, here's the sucky part. Look at it. The thing just keeps going. At least come make, ooh. It finally bounced off of that moving average. Is it going to give us an opportunity to sell? Or to buy, I mean? Oh, I can tell you that I would have. And then just like any one of you, I'd really be pissed now. Why would I be pissed now? No, not the private messages. I just went 13 months without losing a trade on this stock. And now how many in a row have I lost? Exactly, Bill. Oh my gosh, now I got to reinvent the wheel, right? I just had 2 losing trades in a row. Oh my gosh, whatever will I do? If I'm trading correctly, would those 2 have hurt me at all? And by trading correctly, I mean maintaining a consistent position size, right? Some people think, oh, well, I trade Baidu and I got a lot more money now than what I had before. I got to put a lot more money into my Baidu trades. No, by that time, you should probably have a second stock that you trade too. Or the same stock, but an additional system of trading it. So yeah, right there, you identified it, Bill. That's where people give up. That's where they give up. Screw that. The last 2 times you told me to make those buys using that system, they were losers. Right? And reality is that's kind of how it goes. And then the private messages come in, Leonard, for the record. See, now here I'm not even getting an opportunity to buy puts yet. This is really jacking me around. But you know what? Here, I'm actually going to buy puts. I'm going to buy puts. Now, what do I think about my trading system? Yeah. All we care about is what happens right now, right this second, right, Bill? Great. And I sold it. Now it's going to fall further. Am I going to buy puts again right here? Why not yet? Got a downward moving average. I already had the winning side here. Still in the exact same thing it did back here. And right there, I get another sell. Now, sadly, there's no calls buy to make right here. And you could say, well, what if this time it does hit it? Look at all the times when that moving average was moving down. Have you noticed that when the moving average was moving down, none of the up moves hit the top line? You see that? When that moving average was moving down, none of the up moves hit the top line. Now, maybe, just maybe, eventually it started curling up. But your moving average is actually determining your probability. With the downwards moving average, if it gives me the puts entry, I've got a higher probability of hitting the bottom line. Is there really a value attached to that bottom line? The bottom line might be one place one day and somewhere else another day, right? Quite literally, everything we've discussed is the target isn't a fixed price, it's a line, isn't it? But it's a line that's constantly moving. Now, right here, am I going to have a puts buy? If so, why? And if not, why? This day right here. I'm not talking about this day, but this day here. Would it be a puts buy, yes or no? And if yes or no, would your answer be consistent with how we've been trading this? Let me ask you this, Trini. Over here on this day, why did we buy puts? Why did I buy puts this day? And now when we're talking about it, I'm not talking about buying at the high a day. When I talk about candles, whether it's a weekly candle, a daily candle, or a 1 minute candle, what about that candle am I talking about? The starts with a C. L O S, the close. And it was the downwards moving average and the close back below it, right? So I'm not even saying we would have bought on this red day. We'd have bought right here and been consistent with the system, right? And by the way, right now what we're doing is back testing a system. That's what this is called. But I really like how the zoom tool allows us to almost kind of not see the future, right? I cannot see the future right now unless I'm cheating. So let's see how it turns out. Huh. Would I have sold it that day? It might not have been a big gain. Well, actually, it's still $7, $8. Why would I have not sold right here, Trini? Why wouldn't I have sold? I'm buying puts because my moving average is pointing down and I closed back below it. And my target is the bottom line. I would have sold my puts. The direction of the moving average just tells me whether to buy calls or puts based on whatever my qualifier is. We're talking about trading Bollinger Bands. Now let me ask you this. wasn't too long ago, we had a loss here on puts and a loss here on calls that would have had us doubting the trading system, right? We went 13 months without a loss and then 2 in a row. Is it looking like we're still consistent? Would I have had a puts buy right here? Absolutely. I mean, let's think of something for a second. If I make that puts buy at the close, do I know for a fact, without a doubt, it will go down? No. And that's the importance of kind of finding a system to trade something on, because you have to rely on the reliability of that system. Can the reliability be determined after one trade? Even after 2 trades? I mean, let's think about it. Let's think about the person who joins winningstockcoach.com, the coach's roster newsletter, for the first day. Their first day with us is October 17th. And on that day, we have gone 13 months without a losing trade using this system on Baidu. Have they gone 13 months without it? Nope. And then Coach Mike alerts puts, and it runs up $50. And he never buys calls because the trading system he was using never told him to. And now Joe Blow, new member, is just supposed to say, okay, yeah. And then it comes here and it's like, now he alerts calls. And this guy's a freaking lunatic. He doesn't know what he's doing. He's alerted this stock twice since I've been a member, and I've lost money both times. You want to know what's really difficult? Convincing those people to stay with the system. Bruce, getting a ticket to Ohio, yeah, because everybody's coming up to see me, huh? That's when Leonard sends me a package that he doesn't tell me about, and then I have to call the bomb squad to the office, only to find out that it's a collectible beer can that's actually still sitting on my desk, Leonard. And it didn't blow up. Anyway, yes, I would have bought puts here. And no, I have no clue what it does tomorrow. What would I have done tomorrow? We're just going to say sell order, because whether we enter a trailing stop or sell it, we're still selling it, right? As soon as we enter a trailing stop, that's a sell order, isn't it? If I tell you to enter a trailing stop on an alert that I have, there's no reason to ask me 3 weeks from now if I still have it. Either my trailing stop hit and yours did too, or no, it didn't. Am I going to buy puts on this red candle? Let's back that up. Red candle right there. Moving average is pointing down. Am I buying puts right here? Absolutely not. Because every other time I was doing it, it required it to play around with my moving average, right? It wasn't an exact support or resistance, was it? If it was an exact support or resistance, I would have never bought puts ever if it went above. It was a focal point. Really? So no, I wouldn't have bought puts. Which also means that the couple bucks I might have been able to make on them so far, I wouldn't have made. By the way, all these trades that we've walked through so far, and you're like a year and a half into this so far, how many losers? Yeah. Now, were you trading it every day? I mean, look at this period. From the time you sold it and then you bought it here and then you waited like 2-3 months. Am I buying calls here? I got a green candle. Heck no. Heck no. Actually, back it up. Would I have bought puts right here? Absolutely. Now watch real close. Did it ever hit my line? Amy, that would either be like a close of the day, like 3:45 or later that you're buying it, or you come into the market tomorrow and say it qualified for a buy, I'm buying it open. Point is, right here, it never hit my line, did it? So did I get to sell it? All these times it went below my line, I told you I'd have sold it at the line. There were even days it went multiple days below the line after I told you I would sell it. So it would not be consistent with any trading system for me to say, well, maybe we could have sold it here, because that would not be within the guidelines of the system of trading, right? So this one, we can pretty much right now chalk up as a what? Yeah. Now, if you're 18 months into trading this and you just had your third loss, are you too mad at me for giving you the loss there? Now look at this. Am I buying puts there? Look at that. The son of a gun did it. And by the way, when I say it's a loss, on ones like this, and I know some people don't understand this, but when I'm trading something on a system, I don't usually stop out. Why? Because by the time I convince myself I'm not stopping out of the trades, I've been trading it for 18 months. Not very often, Bruce. I think I've had like 5 or 6 in the last year. But here I'm not buying puts. Why? We just bought puts here when it fell below the moving average. Why am I telling you we're not buying puts here? Yeah, it's not pointing down. It had just curled up, which means that a positive move back above that could be a what? So like right there could be a calls buy. Remind me not to follow your alerts. You just told me to buy calls and it made a red candle the next day. I'm going to send you private messages every 30 seconds for the entire day. Ah, man, now it's lower. It is lower now than where we bought it. Did I hit my top line? You know what happens here? Whether it be this system or any other system I use, qualifies for a buy. And for the next week, I am getting a whole bunch of very miserable, sometimes mean private messages, especially on these gap down days right here. And see, this first gap down day, I'm getting, see, I told you I should have sold 2 days ago. And you know what I'm getting on the next red day? You know what private messages I get on this one, that second red day? No, no, no. I already got those ones. I got those ones when it did not keep going up immediately when we bought calls. Like if it's not up $5 within 30 seconds of it, of me alerting it, I'm already getting private messages. On that second down day down there, I was getting told, I stopped out, screw this. Hold on, Trini, we're going to get through this whole process. But that's what I get told down here. I stopped out, and then I'm like, yeah, well, we're down on it, but my system still says to keep it. And then 2 days later, when it did this and I sell it, you know what I get? No, 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 no. Not from the people that told me they stopped out down here. Do you know what I get 2 days later when I sell it up here? Oh, no, 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 no. It's usually less pleasant of a private message than what I even got on this first red day after I alerted the buy. Yeah, that's when I get a beer can that ticks in the box. Well, you're right, Amy. You're right, but at the same time, I also tell people to kind of have a plan for their individual trade. And if a loss is something that, you know, they're looking at it and they're like, I'm not willing to take any more loss than that, sometimes you need to. But again, what makes me confident? What makes me confident to hold after I bought this day and it fell down here? Am I confident because I can guarantee that it's going to be a win? Or am I confident because by this time we have 20 months of trading it and just 3 losers? Now here, you notice that by the time we made this move right here, our moving average was going sideways. Let me back that up one candle. And actually, you could even say it might have been pointing down. Do you see that? Because of that right there, am I buying calls on this move off my support line? No, I'm not going to buy those. Now, the fact that I'm not buying calls, does that make me positive that it won't go up? No. You notice, though, what it did not hit. What did it not hit? What did it not hit? Yeah, it didn't hit the top line. And why? Because the moving average wasn't pointing up. Remember how I told you that moving average is going to determine your probability of hitting your top line. Now, sadly, it is pointing up. And here you hit it. But did I make that calls trade? No. And do I regularly tell people in the chat room that, yeah, you know, it might go up, but right now I don't see it being a high probability trade? You guys ever hear me say something like that? And it's not because a system that I might be trading it on sorry, I had to sneeze. It's not because a system that I am trading it on gives me every single trade. Oh, Amy, if it hits that target, sell order in. But there's no trading system that's going to give you every single trade to trade every single red or green candle effectively. But would it be safe to say that at least so far going through this one, we have a pretty effective system that has given us a high probability outcome on our entries by entering under the same criteria every time? Now here, I didn't take that calls trade. I'm not marking it on my chart. I can clearly see it went from my bottom line to my top line. And I also didn't take the puts trade. Why? Because by the time it closed below the moving average, it was already at the target. That's why I wouldn't have bought that one. Would I bought that red candle? Down, my moving average is now pointing down, and I got a red candle. Am I going to buy it? No. But it keeps moving down. It moved down. Oh my Lord. Am I buying on this red candle? Nope. What about calls on this green candle? No, it's moving sideways here. And actually, even today, it's still moving sideways. Now, mind you, if I was using this system, I would have sold my last trade on April 8th. It's now June 2nd. So does that mean I'm constantly trading this system? No. Do you think there's other systems we could trade the Baidu chart on? I mean, I traded head and shoulders on the weekly chart. We took 275% on the puts, sold only half of them. The rest were free and we had profit, and I'm holding the other ones to see what they do. Can't lose money on them. Well, we're actually using the 21 setting on the Bollinger Band because on this chart, let me ask you this. Anybody that's been here since we started, and we just picked a random point, it was right here. Since we started, which the first trade would have been on September 6, 2013, is anybody going to doubt that a 21 setting on the Bollinger Bands might give you effective trading for Baidu with a center line? You see, I don't always use a center line with my Bollinger Bands. Why? Because sometimes I find it's erroneous and I need to just, I actually have some charts, by the way. That I'll just trade the top line and the bottom line, and I literally buy calls on any positive move off of it and puts any negative move from it. Well, yeah, Bruce. I mean, that's kind of what we did here. Remember, here, let's go back to how we started the discussion on Bollinger Bands. We had a 20 setting on Apple, and look at all the trades we would have missed from it not trading right and consistent, and then we actually took it down to a 14 setting. We started this by actually discussing how it is okay to adjust settings. Now look at that. Look at the effectiveness of a 14 Bollinger Band without a center line on Apple. You know, I hope when I go over these things, people actually start writing in their stock journals that I'm sure most people don't even keep, and saying, man, Bollinger Band setting 14 on Apple. Baidu, Bollinger Band setting 21 with a center line. But you know, if I come back and put this 14 setting on Baidu, and I'll leave it up to you to go through it like we went through it. Because sadly, what you're going to find is where a lot of our buys and sells were aren't going to match up. Now, this one might give other trades, but when we were using the 21 setting with a center line, was anybody angry if they would have traded, actually physically traded themselves, every one of the moves that we made? Would anybody have been angry? It was a 21, Trini, 21 with the center line, the moving average. Okay. Now, I'm going to ask you to be honest with me for a second. Just be honest with me. How many of you see me trade the same stocks over and over and over and over and over again? You get into an alert with me. I lose on it. You lose on it. You don't follow the next alert on that stock. Okay, got a couple people being honest. And now, out of you people being honest, how many times do you see my next trade, or maybe a trade or two later, I go right back into, dang, he's winning every trade on that son of a gun again. And I quit trading it after that loser. And after you just saw me take 5, 6, 7 wins and you finally say, screw it, I'm jumping back in it. Coach Mike has another loser. And then you go right back to saying, screw that, I'm not trading that stock. And then Coach Mike gets 3, 4, 5 winners. And you're like, I'm jumping into the next one. And all of a sudden, then I'm getting a private message from you or an email saying, I think I'm a bad luck charm. You only won because I didn't trade that with you. I'm not meaning to make a joke of that statement. But when I do like a webinar like tonight, can you maybe see the importance of sticking to a stock? Yes, Adam, I am. And the reason you stick to a stock and you stick to a trading system is because Coach Mike might have those 2 losers right there. He might have loser number 3 using this system right here. But what else would Coach Mike have had? If Coach Mike was in it for those 3 losers, those of you that have been here any amount of time could also probably give Coach Mike the credit that he would have been in it for all the winners too. Why? Because he's a systematic trader. And I don't try to trade every green candle or red candle. And I know that that means sometimes that does mean that I miss some trades because I'm systematically trading. Well, you're right, Moss. You're right. Here's what they do. Here's what people do. They enter a trade with me. Actually, we should extrapolate on this to give a really, really, really true and accurate example of what happens with people. And I'm not making fun of it. I'm not saying it's wrong. I'm saying everybody does it at some point or another, and you need to stop. But what happens is they enter one trade with me, and I lose on it. And they say, F that chart. I'm going to go trade this other chart that he's been winning on for 3 weeks. Let's think 50-50 system. Let's think Coach Mike was raping CVX. Nobody was trading it with him. He finally gets 13 trades in one direction with an average win of over 500% on the trailing stop. And everybody here switched to trading CVX. Meanwhile, I'm still trading CVX and alerting trades on BABA. Okay? And the whole time CVX was making this big move, BABA was going sideways. Now, everybody that was pissed off about losing money on the BABA trades switched to CVX. And what did CVX do? It went sideways for 3.5 weeks. And what did BABA do during that time? Oh yeah. For 5 weeks, I couldn't lose a trade on BABA. And after that, guess what everybody did? They switched back from sideways moving CVX to volatile BABA. And what happened to BABA when they did that? It went sideways for 3.5 weeks. But what did CVX do? And I'm not saying they have some weird relationship with each other. It's cyclical patterns between sectors of stocks. But here is the one thing. Had they stuck with BABA the whole time, or stuck with CVX the whole time, or just traded both of them, but if they could only trade one, just traded the one the whole time, Murphy's Law is never a more effective thing in your life than it is in stock trading, folks. Whatever can go wrong will go wrong. And if you jump ship on something that you've studied and have seen work over and over and over again, and you go jump and ship on that, it is inevitable that right when you jump ship, it starts doing well. And whatever you jump ship to goes to crap. Reality check. And no, I'm not being mean. I'm not angry about it. But if we identify these flaws, we can do what with them? Correct them, and we can actually turn flaws into tools that we can use to learn from, and we can stay the course. We can be consistent. We might not have every single week be, oh, this was an awesome week. Yes, another awesome week. Another awesome week. But if we're consistent with them, let's put it this way. I'm sure some of you that jump ship on BABA have since looked at it and say, man, if I'd have stuck with it, Well, but see, the funny thing is, Bruce, is even the 50-50 system. If you do the one thing I stress all the time, before you just jump into trading a system, study it for a while, you'll actually clearly see the times that, man, I wouldn't have been making very many trades during that time. And when it is moving, I'm making a ton of trades. And really, it all comes down to that. Now, another thing that I recommend fully is everybody pretty, before I go on, is everybody pretty good on, hey, at least tonight I just learned something on Baidu that I could make trades on. And technically, even over on Apple, using Bollinger Bands, that I could make trades on. Everybody learned something with that? Does that mean those are the only trades we can make on those stocks? No, because there were a lot of trades in there that our system did not allow us to make, right? Look at all the periods of time when you had up and down moves that we don't have arrows. That's what tells us that there was a period of time where our system did not give us a trade. But do you know what something like this is? You know what something like this is? Bread and butter. Bread and butter trades. What is a bread and butter trade? Yeah. It's those little ATM machines. Were we trying to buy the low and sell the high on these trades? No. What were we trying to do? What were we trying to do with it? We were trying to be consistent and make sure we did not do what? Miss a trade, huh? You don't want to miss a trade when you're systematically trading it, because the one you miss could probably pay for the loser you're going to take next. Wouldn't you agree? Now let's do one more thing with this chart before we move on to another way of reading the Baidu chart. And even before I get to that, I want to say one more thing with the missing stuff. Were we making a buy and a sell every single day on this little bread and butter system? No. Which means if you were going to dedicate money to this little bread and butter system, there would be time that that money would be sitting as what in your account? Cash. What's the hardest thing to do when there's cash in your account? Not touch it, right? Well, everybody wants to trade, but the most important thing about trading is knowing when to trade and when not to. But you see, if I say, you know what? Let's see, over what is that? 22 months. This thing gave me 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I'm not even going to count that one. We were just talking about that one. 14, 15, 16, 17, 18, 19, 20, 21, 22, 22 trades in 22 months, basically. What could that money have done for me if it was sitting there ready to be used for this trade? And we'll get the answer to that question exactly here in a few minutes. The next question, when you go through and back test something, is going to be what? What's your next question that most people are going to ask? Okay, we got all these arrows. Coach, I see that I might be interested in trading this system. What do I trade, right? How far out do I buy? What expiration and what strikes? How do you think we could figure that out? Well, I mean, you could spend $600 to $1,000 on one contract, buying them in the money, probably, yeah. But let's figure the expiration first. How could I figure out what expiration to trade? Let me backtrack a second. Would you agree that if we're looking at a daily chart, we're talking about swing trading? Trades that last multiple days that try to take advantage of a swing, a move, an up or a down move? Okay. And would you agree that you've heard me say on multiple occasions that with swing trading, you need to figure out how long you're expecting it to take and give yourself 2 weeks extra so that time decay doesn't become a big factor? Could you say we're all on the same page with that type of statement? Okay. So let's zoom this chart back in real quick. We're going to go all the way back to where we started. Get a volunteer that has a piece of paper and a pen or a pencil. Thanks, Leonard. Never a dull moment with my buddy Leonard. Can I please just get a volunteer? You're going to write down a single digit number every time I tell you. That's it. Just want you to write down a single digit number. 1, 2, 3, 4. Okay, so 4. 1, 2, 3, 4, 5, 6, 7. So you got 4, you got 7. 2, 2, 7, 4, 10, 4, 3, 19, 9, 3, 9, 5, 8, 6, 6, 4, 2, 2, 7, 8, 'Now I'm going to get really, really complicated and difficult. Bruce, type back the numbers to me. The ones you wrote down as I called them out. Hold on, slow down. Okay. Oh, that's it? Okay, so I added those all together. And how many different trades were there? How many of those numbers did you actually give me? Just count how many times you gave me a number. Divided by 22. That's 6. Can we say that that rounds to 6? How many weeks does 6 trading days cover? No, it covers 2. 6 trading days covers 2 different weeks. Because we're not factoring in if it was a Monday every single time, right? The days actually take place in 2 different weeks. So if I need 2 weeks for my trade to take place and 2 weeks to make sure I'm not screwed on time decay, how far out would I need to trade this system? You're right, Leonard. The one took 19 days, but I'll bet you within the 20 days 4 weeks would give you, that even if you lost on that one, it wouldn't hurt you, and then you wouldn't be spending an extreme amount, and you could still take advantage of the good volatility. So we need 4 weeks. That helps us pick our expiration date, right? Doesn't that help us pick our expiration date? Okay, now, what's the next question people would have? Now we know what expiration to look at. What's the next part of it? The strike price. I don't want to buy $500 calls 4 weeks out if the stock's at 200 just because I think it'll go up, and they're really cheap. Okay, Bruce, you ready? We're going to write down 22 more numbers. Nine. 10. 4. 7. 15. 6. 7. 15. 15. 3. 12. 10. 11. 10. 0. You know why I'm saying 0 for the loss trade? It went $0 in our direction. Another 0. 11. 10. 6. 9. 0. Oops. 8. Okay, type them back to me, Bruce. Wow. Divide that by 22. And what you have is your average move on each of those trades was $8. Now you're going to say, wait a second, there were a couple of those. The zeros were just the losing trades. But what about the 4 and the 3? Did you notice that the 4 and the 3 were like sold the very next day? Did you notice that? They were ones like right over here where you bought it at this close and it gapped down $4 the next day. The $3 ones were like 1 or 2 days. So if I'm 4 weeks out and $8 out of the money, if my sell's the next day, will it matter if it only drops $3 or $4? If my sell is the next day? And I'm not saying your sell's going to always be the next day. Couple of those $15 moves took 19 days, right? We had one that was 19 days long, but it was a $15 move. If I was $8 out of the money and it took me the whole time and I'm into the week or two where the time decay is going to hurt me, I should be halfway in the money, shouldn't I? Or I should be already in the money and halfway to the target. Does that make sense? So now you could look at, wow, if I go 4 weeks out and $8 out of the money. Now, $8 out of the money means you might only be like $6 out of the money when you buy, right? Or actually like $7 out of the money, because the difference between the strikes is $2.50. You don't want to be $9 out of the money. You want to be $8 out of the money. No more than $8 out of the money. But those times where you're getting the $3 move or the $5 move or the $4 move, they're taking 1 or 2 days. So even if you're $8 out of the money, but you're a month out, you think you could still profit on that? Literally, if you bought it today at the close and you sell it tomorrow morning? Yeah. I'm pretty sure you can make money on that. Now, walking through the development of a trade plan, or better yet, a trading system, a trade plan would be what you're going to do for each individual one of those. Oh, yeah. I mean, I'll be honest, if you're $8 out of the money, that $4 move and that $3 move, you might only make 30 or 40%. Now, if it gaps down that next day, your best bet's to sell right at the open on the gap down if it's anywhere close to your Bollinger Band target, because you're going to have the extra implied volatility and a little boost on your options. But yeah, on that one that was $4 and the one that was like $3, you're probably going to make 30 to 40%. But what do you think you're going to do on the 1, 2, 3 that were $15 when you're only trading $8 out of the money? Or the $10 one, or the $12 one, or the $11 one, or the other $10 one. Yeah, those $15 moves could actually maybe be the high triple digit. I don't want to say quadruple digit, but high triple digit. So now what we've actually studied and built a little bit of something in is what is called a trading system. A trading system is a start, but you need what before you actually trade it? And don't say money. I know you need money before you trade it. You need your plan for how your next trade and when your next trade will take place. Your trade plan, if you trust the system, will keep you from doing what? Making the trades that the system doesn't call for, thus kind of screwing you over, because it'll give you a smaller probability of it actually performing in the same way as your study, right? If you set rules for your trade plan study and you don't follow those rules, is that your trade plan or your trading system failing, or are you failing the system? What do you think? Yeah, Mike's fault. He was the teacher. But you're right, dog. That's you failing your system. And I'm going to tell you, you're going to have sometimes you fail your system. I can do that really quick to set up the indicators. If you go to Studies and Edit Studies, you'll get this screen that pops up. You go to the indicator you want. Like if we're talking about Bollinger Bands, you click it and then you hit Add Study, and it'll pop up in this list over here. You click the little wheel beside it, and it'll let you edit that study. The length is that number we adjusted. It'll default at 20, but we adjusted it to 21, and when we did the Apple chart, we adjusted it to 14. You know, I've actually got a chart I use an 8 on, but on the same chart, I use a 100 too. Anybody remember what that chart is? Where I have 2 separate Bollinger Bands? Now my chart's lagging, so you have to hold on a second. There we go. 2 separate sets of Bollinger Bands. Where in reality, that dip we had in September, October, that threw me off on this, if you look at it since, do you guys remember how that indicator was used? You let it fail your 100 SMA, and you buy on the first positive day back above it. And you use your 8 set to target your sell. Now this one wouldn't have been very good, but it would have given you the sell here. So what had you buying here, selling here? Then you would have, oh, it went below it. Here's the first positive day above it. You'd have played around, but see here, you wouldn't have bought again because you'd have still been in that. You'd have sold here. Why? Because it hit your top line. And then you had a day below your 100 SMA and your first positive day above it. You'd have bought. The next day you'd have hated life, but here you go. And here you'd have sold. And then you'd have been like, but it kept going up. So you just made money. Ding dong, be happy. And then here you had a day below it, first positive day above it, next day, crap. But here you go, boom, sell it right here. And then we have a day below it, first positive day above it, comes down, double bottoms. Look, it hits your target here. Now watch, This time it actually came off that center line and hit your target again here, off the center line here, hit your target again here, came down here, breaks above your center line here, and hit your target again here. Boom, 3 trades in the same swing. And here, you actually could have got a buy, even though you'd have probably rather done it here. But this buy, you could actually technically still be in because it never hit your 8 target, but now your 8 moving average is moving down, so you would have sold it right here 3 days ago. The 100's for long-term trend and direction, and for right now, determining where my bounce point is and where my maximum volatility is. Look at this. No matter what the 8 did, the 8 could look really, really vicious. But hasn't it just traded within my 100 Bollinger Band set? And besides this dip back here between the center line and the top? Yeah. So where do you think I'm looking for the SPX now that my 8 set is pointing down? Where do you think I'm looking for it to go? Down to where? No, down to the 100. Look at this. The last time it turned down right here. See, look at this. All of this was up, 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 up. As soon as it curls down, where'd it go? 100 SMA. Look right here. You're going up, 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 up. As soon as it curls down, boom, 100 SMA. Right here, up, 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 up. As soon as it curls down, boom, 100 SMA. And as long as I'm above the 100 SMA, I'm going to think short term for what types of trades? Short term on my shorts, right? For positive beta stocks. Why? Because let's look at this. Every time that thing curled down, 1, 2, 3, 4, 5th day, bottom. Well, it curled down. Here's 1, 2, 3, 4. 5th day could be the bottom, right? It's not taking a lot of time by the time it confirms the signal, which would have been here, to when it hits. It's literally just a couple days. Why do I want to be out 3 frickin' months if it's only going to take a week? But as long as I'm above that 100 SMA, I can think longer term on my longs. I can trade them out further. I can buy common stock every single time it hits one of these. And eventually that'll fail. And when it does, I'll think longer term on my shorts and shorter term on my longs as I'm trading in the bearish channel. Very, very effective indicator right there, by the way. Now, throughout this summer, we're going to be spending a lot of time learning about charting. And for some people, it's going to be kind of repetitive. It's going to be, well, I've already seen your charting webinars. But for some people, they haven't. Today, I started with Bollinger Bands. Why did I start with Bollinger Bands? Anybody have an idea? Exactly, Leonard. And let me ask you this. Do I have to worry about if I drew a line in the right place or not? So even a new trader could, now, let me tell you, you could probably find a Bollinger Band setting that's effective on any chart, okay? You could probably find a Bollinger Band setting effective on any chart. Is it going to be the same setting? Was it the same setting for Baidu and for Apple? Did we use the same settings for the SPX and Baidu? Do you see the effectiveness even on this chart of Bollinger Bands? Can you see that? And then even when we went back over to Baidu and we had the 21 SMA or the 21 set for Bollinger Bands, the 21 looked pretty effective, didn't it? 22 trades, 3 losses. Could you live with that? On Apple, the 14 setting on your Bollinger Bands without the center line. At your top line, buy puts. At your bottom line, buy calls. Bing, 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 bing. That's it. That is it. Is it going to help you catch every single move that the stock makes or every possible trade you could have made? Absolutely not. Is it going to help you understand the potential of the trade and your expectations of your trade by following a system? No, Scooter, I actually don't swing trade the SPY chart, and I don't even usually draw on my SPY daily chart or have anything on it. I only use the SPY 15-minute chart. It's the only one I use for the SPY because all I want to see is intraday volume, which I can't see on an SPX chart. I want to see the traded volume, so I look at the SPY. But the SPY is just an indicator to me that I trade on Fridays for fun. Well, do you know why I have them colored yellow, Scooter? Well, any chart that I have an 8 simple moving average on it, what color's the 8 simple moving average? Yeah, every time I use an 8, it's yellow. Every time I use a 21, now I had that blue one on there tonight, but it's usually pink. Anytime you see a pink line on my chart, that's like a moving average or Bollinger Bands, it's a 21 setting. If it's orange, it's a 34. If it's red, it's a 50. If it's that blue color, I actually stopped using the 100 for a lot of stuff, and I use a 5, and sometimes I use the blue for the 5, so that's my fault for being confusing. Purple's a 9. Teal is a 200. Navy blue is a 14. Do you know why I do that with the color coding? You know why I color code them? Yeah. I can look right at it and instantly know what it is. Or you could look at my charts and instantly know what it is. You don't have to say, what's the yellow one? Because if it's yellow, it's a what? The setting on it is what if it's yellow? 8. There you go. So like my SPY 15-minute chart that I'm showing during the day, it's got a yellow line on it. What do you think it is? There's the right side of my screen that I show. Right here's the 15-minute chart for the SPY. What do you think that yellow line is? Yep, the 8 simple moving average. Got it up here on Apple 60 as well. 8 simple moving average. I always laugh sometimes. Well, that kind of sounds stupid in English to say I always laugh sometimes. I always laugh when somebody that I know in the chat room that cannot think long term at all, cannot think past a couple minutes down the road, tells me they're buying something on a 200 moving average or a 100 moving average. Because that's such a longer term moving average. An 8 moving average is a pretty good and simple type moving average to use. It's not too choppy like a 3 or a 5 would be, which are also, by the way, fairly popular moving averages with some types of traders. It's not choppy like them. It's usually nice and fluid. You can trade the direction of it, and just like any other moving average trade, though, it'll have you in for all the big moves and essentially plus or minus a very small amount breaking even on the moves that aren't very big or that even go the other way.